Hey there, welcome to today's daily premium newsletter for May 22nd, 2018. And happy Bitcoin Pizza Day. Today is a comical holiday celebrated annually by the cryptocurrency community. So the backstory is that 8 years ago, a Bitcoin Talk user paid for 2 pizzas using 10,000 Bitcoin. While it's easy to laugh at the $80 million price tag for 2 Papa John's pizzas at today's prices, it's important to understand what it symbolized. It was the first time that someone paid for a real good or service using cryptocurrency. With anything, someone had to do it first, and it just so happened to be pizza with Bitcoin. Unfortunately, the market did not react positively to Bitcoin's pizza party. There's a lot of fear in the market right now, and it stems from regulatory uncertainty for both the US and China. And obviously, these are two countries which have the most power to help or harm crypto's future. In China, a report issued by the Ministry of Industry and Information Technology, certain risks cannot be ignored in regard to ICOs. The report compares the current climate of crypto to internet's early days, advising against false propaganda and excessive speculation. Recently, we saw news out of China that the ICO market is still very active despite a government ban. And there are fears in the market that because of that, the Chinese government will further increase strict regulation on crypto instead of embrace it. Meanwhile, in the US, there was a lot of news today. First, the US Commodity Futures Trading Commission, or the CFTC, issued an advisory statement for listing cryptocurrency derivative products which aim to provide clarity for exchanges and clearinghouses. The advisory specifically focused on areas involving the listing of derivatives on a designated contract market or swap execution facility. It emphasized the necessity for more market surveillance, large trader reporting, coordination with the CFTC staff, and derivatives clearing organizations' risk management. Essentially, the CFTC is focusing on the latest best practices for launching cryptocurrency derivative contracts. They believe exchanges should be able to monitor underlying cryptocurrency spot markets and importantly coordinate with federal regulators. While the advisory is not considered a final compliance checklist, it does offer insight into the CFTC's expectations and aims with the future of clearinghouses and exchanges in a dynamic crypto market. We see this as an important step forward for crypto and more importantly crypto exchanges, as working with regulators right now is the best course of action for long-term viability for this space. Exchanges receiving the blessing of the CFTC would take us one step closer to mainstream adoption and institutional investment, which is important at this stage of crypto's life cycle. Meanwhile, Jay Clayton, chairman of the US Securities and Exchange Commission, or the SEC, praised the joint effort between the United States and Canada for cracking down on cryptocurrency fraud through the task force Operation Crypto Sweep. Operation Crypto Sweep was launched last month under the supervision of the North American Securities Administrators Association, or the NASAA. We've learned that the task force has launched 70 investigations into potential cryptocurrency scams and fraudulent ICOs since it started. It's the largest coordinated crackdown to date by state and provincial officials on Bitcoin scams. This move by the NASAA is certainly going to drive fear in the market in the short term, but we think this is an important move that should not be overlooked. Government agencies are distinguishing between legitimate and fraudulent projects, and this will continue to be the norm. If the SEC has their way, ICOs will have to go through them, so there will no longer be these get-rich-quick ICOs that steal investors' capital, but at the same time this will impact the speculative nature of the market, leading to less volatility. Look, these are all good things and beneficial to the greater crypto space in the long term, even if it's uncomfortable in the short term. The news from the US continued as the US Department of Defense, or DoD, recognized cryptocurrency as a form of foreign currency that could potentially have an impact on decisions in recruiting new employees. The DoD's primary concern is whether investment in cryptocurrencies indicates criminal intent, which could possibly detrimentally affect a candidate's profile should they be considered for security clearance. For now, no official stance has been given. The DoD is reportedly waiting for the Treasury Department, Securities and Exchange Commission, and other agencies to give a legislative interpretation of cryptocurrency. That being said, closer examination of job applicants who own crypto would certainly affect the DoD's efforts to expand operations in cyberspace. We think the thought that owning cryptocurrencies somehow is indicative of criminal intent is laughable at best. Perhaps that criticism could have been levied against the early Bitcoin community, but today's crypto market is diverse and any criminal activity is a tiny percentage of the overall volume. In other news today, Circle Invest, the Goldman-backed cryptocurrency exchange, is going after crypto index funds with its new Buy the Market feature. This allows retail investors to purchase market cap weighted positions, allowing them the option to decide how much they want to invest and then automatically distribute it across the cryptocurrency supported by the platform based on each coin's market cap. Another exciting announcement today was Binance's addition of the stablecoin TrueUSD. For those who don't know, stablecoins are coins that are pegged against the US dollar or some other asset, so they always retain a certain value. So for example, TrueUSD is always going to be $1. This finally gives a viable alternative stablecoin to the controversial Tether that we discussed yesterday, and we look forward to more stablecoins entering the market. So for his thoughts on today's market, I'll turn it over to Doc. Have a great rest of your day, and we'll talk to you tomorrow.
Good evening, Doc Severson here for ReadySetCrypto. We continue to shed red ink across the market, and really it's not a surprise, and this is what I've been trying to communicate to you guys, is right now we're still in the grips of this bear, and until we reverse this process of seeing lower highs and lower lows on the weekly chart, as long as we are in a weekly downtrend like this, this will continue to exert negative pressure on markets because larger time frames dominate the trend. And that's my rule number one of price action. Larger time frames dominate the trend. So we tend to get excited when we see something happening, myself included, on the daily chart. We start to see a daily chart rally and we say, oh, great, this could be the one. This could be the one that lifts off from here. And unfortunately, this is what happens with every bear market rally along the way, is that every bear market rally turns into hope, and then everybody piles on at the end, and then the guy get crushed and wrecked to the downside. And then the cycle continues, and this is why we eventually have to have a capitulation cycle where everybody finally just walks away from it and says, I give up. I give up, I can't do this anymore. And that's sort of what has to happen for emotional purposes. And we can go back over any number of bear markets over the years and any number of types of markets, and we will see exactly the same thing happening time after time after time. So eventually what happens is when this finally does rally in what we call the relief rally or the disbelief rally, either one, nobody's going to be on board for that. So volume typically is fairly light on that disbelief rally because everybody says, oh, go ahead. You be the sucker that rides this thing, and I'm going to sit down here in cash, or I'm going to be in some other markets. And then usually what happens is that's where they end up chasing it. And this is what happened back here in this, the bear that started at the end of 2013 all the way through 2014 was to the downside. So if you think this one's bad, this one was worse back in 2014. All it did was just go down. And then 2015 was for several months, took 9 months of just winding sideways before finally, here comes the rally. Here's the disbelief rally that nobody was on for. Now, I do have to admit there's a little bit of more volume here now down near the bottom. So that's good. So we'll see whether or not we have increased volume on our disbelief rally, but that is what has to happen for this bear to turn around. So what do we do in the meantime? What do we do in the meantime? Well, what we have to do is, let's bring it back to today. Look how far the price is up. I mean, let's give it a break. The price has gone a long way, and this is why we're generally using the log scale to take a look at Bitcoin these days, just because it's had such an amazing rally. Now, when we put this into the log scale, it's it looks a lot more normal. That it's just a pretty decent pullback here. So, what we have to do in the meantime is we have to look for the overall market rallies and play within those swings. So, unless we're going to play short, and I really don't recommend that a lot of people play short this market, unless you want to use something like Bitcoin futures or other types of derivatives where you can limit your risk to a fixed amount on each trade. Going naked short in these markets is really not a good idea. Don't let anybody talk you into it. So we just have to be patient, and we'll look for opportunities where we can play inside of these swings when they do come. And they will come. We will see the swings come along that we can play inside of these. We just had one last month that we did a number of swing trades in, and that's okay. But the ones that we get in at the very end are not going to fare so well. But if we use fixed risk positions on these, we are not going to sweat it. We can always live to trade another day. Okay, I'm going to bring up our screener, and what's interesting about the screener, not much is really popping up that's really all positive right now. Zencash is one that seems to be attracting some attention, although this is just a big, ugly sideways pattern for right now. So that's not all that exciting. Now, one thing I want to call to your attention is notice all of the coins that are showing up, showing positive results here that are using Ethereum as the base currency. There's a little bit of a problem going on right now with Ethereum, is that Vitalik is perhaps saying the wrong things. I mean, it's interesting where, you know, people would communicate so openly something like this, like potentially a job offer from Google, okay, and that is going to destroy Ethereum if that is the case, because if the founder leaves, that's not going to happen. So right now, Ethereum is down about 6.5% as I write this, and that is just based on more FUD. You know, this market revels in FUD right now. Now, in the midst of all the doom and gloom, there are actually a couple of coins that I still like right now. This is Nulls. Nulls is creating a cup with handle pattern. If you want to know what a cup with handle pattern looks like, or if you've never heard that expression before, this is actually a technical pattern, and it's created by this deep sort of dish or base like this, and then eventually what happens is accumulation starts, gets up to the neckline, which is up in this area here, and then normally we have some type of consolidation here. So there's the cup, there's the handle. The consolidation quite often looks like just a normal bull flag, and then eventually what happens is we do get the break above there. So right now this is almost a textbook cup with handle pattern. So I might look for, in the midst of all this doom and gloom, I might look for a long on Nulls and look to take this one on the breakout above that neckline. So once again, the best way to do that is simply place your cursor up on where you believe the neckline to be. In this case, it's 0.0006 or so, and I'm just going to add an alert in that area. And again, I think what's really important is that you write a little note to yourself in case this does happen. And I want to just say something like Nulls crossing cup handle neckline long. Okay, so write a little note to yourself, let yourself know that you're interested in something and what to do with it, because otherwise what happens if this shows up a month from now? Maybe it takes a month to break out above there. You're not going to remember what this email is coming from TradingView telling you something about Nulls. You may have forgotten by that point. So go ahead and write yourself a note, let yourself know what to do. Go ahead and create that, and then off you go. Okay, guys, that is it for tonight's report. Thanks for listening. We'll see you tomorrow.